Group.
Serena, come on.
And then enter this company that educates real estate investors. Oh, I know. Yeah.
I'm like, their rates, 8%.
So honestly,
Yeah.
I'll never buy in Ontario unless it's a student rental or a senior's home or maybe a short-term rental.
It's a pretty cool experience to be like, holy shit, I could do my own book.
That wasn't my intention.
Okay, that makes sense.
To protect yourself, I think diversification is the most important thing.
Right. From a realtor business perspective, is that it costs a lot of money to make money.
I would rather take hit on 50,000 or 75 that might get delayed rather than hundreds of thousands or something you're really depending on.
I scare people sometimes. From wine country to cottage country, real estate is all about lifestyle. I'm Andrew Perrie, and welcome to That Fine Life. Welcome back to another episode of That Fine Life podcast. I'm your host, Andrew Perrie. This is the podcast where we interview entrepreneurs, salespeople, investors, now authors. We've had a couple authors on the show, and today we have Serena Holmes, the perfect real estate name, and the author of The Accidental Entrepreneur.
That's right.
That's amazing. Welcome.
Yeah,
And you came
you.
from 2 hours away
Yes.
in Pickering, Ontario.
That's right.
But you're not just here to see me. What are you doing in Niagara?
Well, I'm turning 42 tomorrow, so
Wow.
I have a little weekend getaway with the family.
That's amazing. And they are hanging out in the car? Are they
They've gone
checking
to
the
the
hotel?
outlets for an hour, and then they're going to be back to get me.
Nice.
Yeah.
That's amazing.
Yeah.
Okay, so lots to unpack here with your role. I forget how we met, but I want to say it was through like Nick Regina's Titan group.
That's right.
Is that
Yeah.
right?
Yeah.
How do you know Nick?
I think I just
Or just
commented
kinda
on
the
a
same thing?
post,
Yeah.
and he's like, "Hey, you want to be in my social media group?"
Serena, come on.
Yeah. I guess he saw that I was kind of active on social, and
Yeah.
next thing I know, I'm with all of you guys.
Yeah. So
Yeah.
you're very active on social.
Yeah.
Son of a bitch, because I wake up so early, and
I'm always the first post you see.
yes, you're always the first post I see. That's
Yeah.
for sure. And like for me, it's I have a regiment. I try not to consume so much before I create. And my
Yeah.
creating is I send out daily motivational emails, some tactical or whatever.
Nice.
So now I'm gonna have to start switching my routine a little bit so that I can post before you.
No.
But I've tried posting at like 5.
Yeah.
I don't get any engagement, so I wait till at least 7. So that's the only reason why I do.
Yeah.
But are you are you batch creating all this stuff beforehand or?
Yeah, so for the podcast that I launched in June, I actually batch about a month in advance because I do all the posts that pre-promote the episode and post-promote it. And then for the realtor stuff, I usually do about a week at a time. And then I've got a very specific structure that I follow that you've probably seen. It's like, the market updates, Tuesday tips, a podcast, Thursdays usually videos. So it just kind of rotates through kind of a particular type of content. So it's easy to know like what I'm going to focus on.
Right.
I do try to post on Instagram later for the same reason, but I do stagger them out because I attach the podcast stuff as well. So
Okay.
yeah.
Now, so what would you say is taking up the majority of your time right now? Because like I said, you're an investor.
Yeah.
You do private lending. You're a realtor, and
Yeah.
obviously I know that they all work hand in hand.
Yeah.
But with the market dynamics, what is kind of taking up majority of your time right now?
Yeah, well, I have a 3-year-old, so I try to work within the windows of 9 a.m. and 3.
Yes.
So, I don't really have a regular full-time schedule in the sense of like a 9 to 5 and then evenings and stuff like that. So I cram a lot in. So, I do all of my own marketing in terms of content writing and blog writing. I had my own event agency for 18 years prior to going into real estate, which I just sold last year. So I have a lot of digital marketing training and stuff like that. So it's a bit of a mix. Like, obviously the podcast is taking some time working on the marketing, reaching out to people, servicing clients and all of that. So every day can vary, but I have the flexibility to obviously be with my daughter and, take today off because we're going on a little family trip and stuff like that.
Course.
So that's where the investing supplements my income. So I'm not out there worried about being in an open house every single weekend because I have been able to depend on real estate investing income for the last 4 years.
That's right. So we were talking off camera, majority, if not all of, your income over the past few years was directly generated from your investments. Now, is this directly from, particular properties? Is this from your lending? And I'm assuming it's interest only.
Yeah.
I'm sure you have other terms and stuff like that. But is that kind of the main accumulation of the wealth?
Yeah, in the last little while, it's been the biggest driver for me. But it all kind of started because I was staffing events for an education company in Texas and Florida. So we were providing them with their scalable support. So they're a company here out of Guelph, but they would travel all around. And at that time,
but you were here. Sorry to cut you off.
I was here, but we had staff all across the country and also in the States. And at that time, I'd sold my first rental property, which was a short-term rental in Florida. And I was just holding on to the money because I didn't know like what to do next. And then enter this company that educates real estate investors. And I signed up with them and, bought 2 pre-construction properties, did a land deal, invested in 3 syndicated mortgages. And then through a friend, she's like, you should talk to my mortgage broker. I do a lot of private lending. And then that introduced me to that concept. So I'd loan to people for various reasons, like maybe they had to wipe a line of credit before a mortgage closed. Maybe it was a business loan. So it could be something like an interest only, principal and interest, like the terms would all completely vary.
Yes.
And then last year I wanted to ramp that up and I reached out to my community within Keyspire and someone kind of gave me a big list of all the people she'd been happy working with, set up discovery calls. And then I was able to go from, an average of 3 to 6 deals a year to, I think last year I did 25 or something like that. So like really ramped it up. Yeah. And I've been able to really, support my lifestyle and then also pay off a lot of other deals that would be like longer term investments.
Right.
Yeah.
And then so for those that don't know, what is Keyspire? Yeah.
So Keyspire is an education company for real estate investors. So they would, teach you about all the different concepts, whether it's a fix and flip, multifamily, things like that. At that time, it comes with coaching sessions in their investor summit. And then they have a private Facebook group. So all of us members, being 3,200 of us around the country and now into the States, can all communicate regularly. And then I also joined a mastermind with, more higher level investors this past year. So there was about 70 of us. And then I also joined Wealth Genius. So
Wealth Genius?
That's similar to Keyspire, but different, where you'd focus on a particular stream. So land development, multifamily, US or wholesaling. So my focus will be land development because I want to understand and identify those opportunities. Yeah. Obviously the biggest margin right now because of the housing shortage is land development. Right. So I thought that would be, a good way to put my license to use and look at things in different ways.
And would that, I think you touched on it, but would that particular program be, spilling out into the States as well, looking for those types of deals?
Yep.
Because
they do have opportunities there as well.
Yeah. Well, when I went to Florida, I was like, holy.
Oh, I know. Yeah.
I'm like, their rates, that for foreign investors anyways, right now, just with the bank is 8%.
Yeah.
And, you tell that to a Canadian, like, wow, 8%. Yeah, but you're 10Xing your money.
Yeah, yeah.
Right?
Yeah, so the dollar value goes that much further, even with the exchange. And Florida, as an example, is also a very landlord-friendly state. So you can have 75% of tenants out in a week and 100% a month. Yeah. So for those of us in Ontario, I know people that have been struggling with tenants for years. So, I think that's appealing as an investor.
I bought my apartment building, mixed use in Muskoka in downtown Bracebridge. And the day that I bought it, I went and talked to all the tenants, before it closed and just, tried to meet them. And, I was being a nice guy. There's a couple of people in the back that were smoking, paying under market rent by a lot. And, I knew that, what am I going to do? Kick them out? Like, come on, they're in rough shape already. Yeah. I'm going to try to do what I can. And then, these 2 young girls, $1,600 a month for a 2-unit, good price. I asked if there's anything I can do or fix up for you, please let me know. And if I did, would you be interested in maybe paying a little more? Yeah. I said, yeah, absolutely, no problem. Turns out they wouldn't let us in. We couldn't do this, we couldn't do that. Yeah. And then next thing you know, they hadn't paid me since day one. So it was like a year before they finally left. And when they left their pets in the unit.
Oh, no.
Yeah, we had to call the OPP, the Humane Society. They sealed off the whole door. Wow. So I couldn't even go in and assess the unit.
Well, that's what I mean. So honestly, I'll never buy in Ontario unless it's a student rental or a senior's home or maybe a short-term rental.
If anybody has any senior homes, by the way, please let us know.
Yeah, so in general, I've stayed out of Ontario for that reason. Good. So I've bought in Florida, Edmonton, Langley, anywhere but here for that reason. But just as an investing tip, any investor I've ever spoken to is don't ever introduce yourself to your tenants. I met one gentleman who has 27 apartment buildings and he'll go in sometimes and, he'll just pretend he's maintenance. He's like, you do not want them to know who you are.
Yeah. So I have a property manager. I I don't think they ever knew my name. It was in my corporation, right? But it was just when I was touring the property the first time, right? So, but yeah, you're absolutely right. That's a good tip. Yeah. Okay. So, Keyspire, Wealth Genius. Now, when did the idea of a book decide? When did you decide that? Because I know with my experience, everybody's like, "Why'd you do that? You know, what is the point?" Blah 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 blah.
Yeah.
And I'm like, it's the biggest business card that you can have.
Yeah.
And you know, for example, my book is a wine book, and they're like, "Well, what the hell does that have to do with real estate?" I said, you know, when you're in towns like Muskoka, Florida, Niagara on the Lake, obviously, you're selling the lifestyle. I mean, the pricing here is fairly. It's not inflated by any means.
Yeah.
It's just that the price, you know, it relates to not just the house but the community.
Yeah, absolutely.
Right?
Yeah.
So what's all around here is wineries. What do most people come here for?
Yeah.
Wineries.
That's what I was just commenting on the little drive here.
Exactly. So that's what I have for them. And, you know, there's a little blurb about me in there. And the idea is to bring, you know, people into the office and pick one up.
Yeah. Yeah. And I think that's even been my whole take on real estate. Like at the end of the day, it is more than just buying and selling houses. Like when you think about all the things that home is associated with. So that's really kind of an approach that I've taken. But going back to the book, my life is kind of crazy growing up. So literally people would always say, you've got to write a book about this one day, just because of, you know, the personal things that I went to growing up. But I feel like they paved that path for me as an entrepreneur. And, you know, I didn't start the business that I later came to own, but just how I seized the opportunity and then took it forward for another 14 years after the founder left. So all of those things kind of become intertwined. Like you can't really have it being a business book without, you know, explaining how that all came to be, right?
Right. I like that.
So that kind of all came together there where I knew I wanted to do that. But when I joined Keyspire, they had someone there selling a writing retreat in San Diego. So I was like, I've always wanted to write a book.
Yeah.
So I went to San Diego, sat in an Airbnb for 3 or 4 days, hammered out a little over 50% of the book, came back and finished it. That was in 2017. And then hit a wall when it came to publishing. So I kind of put it on a shelf for a couple of years. But then when COVID hit, my business came to a standstill. So I did 2 things. I registered for my real estate license. Then I committed to getting the book published. So I went through, I think, a year's worth of editing and everything else. And it officially launched in October of 2021.
Wow.
Yeah.
And so how did they kind of help you with, I'm sorry, maybe I should ask this question. Is it more like Amazon direct publishing?
I have a self-publisher, but it's on various retailers. So Amazon being one, Barnes & Noble, Indigo, like there's a whole list of retailers where they would disperse from. Obviously, Amazon's the easiest and the biggest and most well-known. So it's just print on demand.
Print on demand. There you go. Yeah, exactly. So that's what we did with our book.
Yeah.
Couldn't have been an easier process.
Yeah.
You know, and our book is actually #1. I mean, I'm sure there's not a whole lot of people selling wine books, but you know what I mean? It's a pretty cool experience to be like, holy shit, I can do my own book.
Yeah.
I can have, you know, help writing it and designing. That was the hardest part, was designing each page to fit into the thing and then upload it. I had to have help with that.
Yeah. So my publisher did all of that stuff. Yeah. Like I didn't have to worry about too much, like just how things fit. And they gave me samples of, you know, different book covers and all of that. But it just, you know, you obviously pay to have that stuff done, but it still wasn't, I don't think, overly crazy when you look at it. So
of course, you know, and so do you speak?
Speaking engagements?
Yeah, do you do that kind of stuff?
Well, I started doing podcasts going back about a year ago because I thought, you know, what better way to promote my book than to get in front of other people's audiences.
Right.
And then it just seemed like it took off. And through one of the podcasts, a girl that was supporting it's like, you know, you should really start your own podcast.
Yeah.
And that wasn't my intention. But then I did have this idea just to inspire other people to invest, because I've met all these really amazing real estate investors, especially in the past year, that, you know, maybe they were project managers at Nike, or maybe they built helicopters. And then somewhere along the way, someone said something to them or something happened. And next thing you know, they've shifted over into real estate investing for a variety of reasons. So it's to kind of bridge that gap for people that want to invest, but maybe they feel like they can't do it or they're intimidated. And, you know, just to show them like anybody can really do this. That's and to share those stories and to share how they kind of got from there to where they are now.
I love it.
Yeah.
But you know what? I think just you speak so, what's the word, like adequately, and you're easy to understand, and you present yourself very well. So maybe the next thing is more speaking engagements for you.
Yeah. Maybe eventually we'll see.
That's way to sell your book too.
Yeah.
So that's really cool. And so the podcast, have you ever seen Patrick Bet-David's podcast, by the way?
I don't think I have.
Just a little tip. He's got his book right behind his head.
Smart.
So every time the camera pans to him,
right
he's got his book. So what is the idea then? Where do you want to take this investment journey of yours?
Yeah.
What is like that? Where does that side of the business even take somebody?
Yeah. Yeah. So I think one thing that I've found is that I've probably been a little spoiled being on the passive side, because I'm like, you set up the contract and then you just wait for payday, right? So I think having a young child, and I know you've got 3 of your own, I've really been, I've really appreciated having the time that I've had with her when she's young, and I don't want to necessarily give up, having a work-life balance. So I think what I've really discovered in this past year is that I just want to joint venture with someone that, why would I suffer and struggle through things like buying a multifamily property in another city by myself when there's people that have done this over and over again? They know what they're doing. The numbers can be really, really attractive when you look at things like New Brunswick or Alberta. They're landlord friendly as well. So I kind of narrowed down probably 2 or 3 people that I've met through my mastermind that I'd be comfortable doing that with. Yep. And then ideally the plan is that you put the money in, ideally you refinance, pull that money out in a year or 2, and then you can keep on recycling that original capital. Yep. When you pull out additional money on the refi, which is also tax-free money, you can then put that into other investments. So if I can go from maybe investing $500,000 in the first property and then keep recycling that out, where maybe I have a portfolio worth 10 or 20 million in the next 10 to 20 years, right? And just kind of build that up through them. Eventually, it'd be nice to learn along the way. That's kind of one side of it. And then the other side, I think, just because I have spoken about private lending a lot, people keep coming to me looking for opportunities. So, in some instances, I will connect them with people I know that are raising money that I trust. But ideally, if I can get a seat at the table as a general partner for a company that's looking to scale, maybe that can be an area that I facilitate so they can focus on the project and I can bring in investors. Right. So that would be another way to build my portfolio. It would be a little bit more active, but I feel like I find it really fulfilling because it's changed my life. Right. I went from working 60, 70 hours a week to being able to have that time with my family, and it wouldn't have been possible if investing hadn't come into the equation.
That's right. Now, so if somebody, let's just say this, okay? Somebody sold their house, sold their investment property, or they've lived in their house for more than 5 years in Ontario, and they've got some equity. Maybe they can pull out $50K, maybe they can pull out 100, maybe they can pull out 500. For the average person, what is kind of that sweet spot, or maybe some advice or suggestion on how much somebody would need to make a move lucrative enough to, be interested in joining with them?
Yeah, so I guess on one scope, like in the glory days, interest was only 3%. So if I was loaning out at 15, you're making a good spread. Obviously, interest rates are not 3% anymore. So I think you always want to look at deals where you're going to still make a good spread and consider that interest rates may continue to go up a little bit further. Hopefully not, but the reality is they might.
And is that because you're lending on an interest rate as well?
Yes.
Like you're borrowing as well?
So I use my home equity line.
Okay.
And I think really, I think to protect yourself, I think diversification is the most important thing. Right. So if you're using $500,000,
I'm learning that, by the way.
Go out and do 10 deals or 20 deals with all different people and companies in different places. I would never, ever suggest to do all of what you have in 1 or 2 deals. Like, you just never know if something could ever go wrong. I'm even dealing with my first kind of situation right now, and you just never know, right? Yeah. So you can imagine, like, I would rather take a hit on 50,000 or 75 that might get delayed rather than hundreds of thousands or something you're really depending on. Yeah. Because I have, 15 or 16 other deals going on all at the same time. So I think you need to be mindful of what you're looking for. And also, if you're in a high paying salary job, you may not want that kind of personal income coming in on top of your regular income. Right. So in that instance, it may be better to go with something that could be an equity investment that comes in later. There's opportunities for registered funds with mutual fund trusts and, real estate investment trusts and stuff like that as well. So you just need to look at your whole picture to decide what makes sense.
Could they not start a type of trading company or?
They could. Yeah. Obviously, I'm not an accountant. But
of course,
that's something I've talked to people about. If you're making already a few $100,000 a year, then you may not want to bring in another 100,000.
Absolutely.
Or like just depending on where your threshold is with the taxes and stuff like that. So it depends on your objectives. Like, some people want the cash flow and that's what they're after, and other instances they want the long-term equity.
Okay. Yeah. All right. Now, so how does this all help in the real estate business, like from the sales perspective for yourself?
Yeah. I think it's hard because I had my own business for 18 years, and then you come out as a realtor, and I can't say I've sold, 1,000 houses. Like I can be like, I've planned 12,000 events, but I can't say I've sold however many houses coming out. Yeah. So people act like you're literally coming out of high school sometimes. So I think having this real estate investing approach, I can say, I ran a business, I've published a book, I've done all this investing, and I also bring a different perspective with the lens. So, a lot of buyers right now are looking at these properties that are, beautiful and very turnkey, but that comes potentially with multiple offers and competition and things going over asking. That could lead to issues with appraisal costs and stuff like that.
Absolutely.
So my last buyer, we saw a home that, had been the same person living there for 50 years, and it just needed a little TLC.
Yeah.
And we were able to get it, no competition, no multiple offers, got it under list price, and she was able to use some of the money from the proceeds of her other house to fix it up and turn it into what she wants. But I think from someone, maybe that doesn't have the investing side of that experience, they may not look at it completely in the same way. I think she'll probably house hack down the road, put in a basement apartment. So just looking at it from all of those angles to make the numbers work and turn it into something where it was a lot harder to maybe secure one of the other properties.
That's right. So, what I call that, and I talked to my team about it in terms of leadership and, really how to grow in all aspects of your life. It's called anticipation.
Yeah.
So somebody with experience like yourself would kind of know, okay, so if this happens or if these changes happen here, this is what you could be expecting.
Yeah.
Whereas, not to shit on other realtors, but, I have seen people that would just take an investor, and honestly, myself included in my first year or two, that they're taking through the motions of just buying the property on the premise of, yes, we could rent it out and cover your mortgage, no problem.
Yeah.
Yes, the market will go up, so you don't really have to worry about, either how much you're putting in, what types of actual improvements to the property can even hurt you. You don't think of those things when you're an investment realtor, I guess.
I can draw even from my own personal experience, because we bought a home that was older, spent about $50,000 renovating it. It reappraised $150,000 higher a year later. We were able to put a home line, and that's how I bought my first rental property. So just looking at what those strategies are, right? I think there's a lot more that you can look at with real estate than just somewhere to lay your head at night. So I think that's important.
Okay. Now, do you have any aspirations based on, your experience to kind of grow your own community outside of what you're doing now and really start, helping? I mean, I know you're helping people now, but maybe something, because I know the EXP model, that's where you are, right?
Yep.
Yeah. So, I mean, I know they're heavily invested in, building communities and collaborative spaces for other realtors who want to get into investing.
Yeah. I mean, I moved over to EXP in the sense that I honestly didn't know anything about them. And when I did my first round of interviewing, when I got my license, I didn't even think of them. I actually thought they were like a value brand brokerage, because I saw a for sale sign. It was just kind of shabby, around the house for me. And I was like, well, I'm not going to interview there. Yeah,
they had the blue and the orange.
No, it's just like a flimsy sign. Yeah. It literally was my impression of it. And then when I actually met with a couple of realtors on different groups, and it blew me away. I just felt like you're going to pay less, get more. There's a lot of opportunities with stock options, revenue share, agent attraction. There was so many things, and it was really robust with a lot of potential. So to me, it just made a lot of sense to go that path. I haven't necessarily entertained agent attraction yet. It's not like I have, a big team. I think when you're bringing over a team that's established already, and then you can build on that, it makes sense. Of course. But maybe eventually, we'll see where things go.
A really good friend of mine, and I can put you in touch. She's in the States. I believe she's with EXP. So what she does, and you might do something similar already, it's called Pints and Properties. And she developed it, and she packages the program. You can do it in Texas. You can do it in Tallahassee. You could do it anywhere in Ontario if you would like. And basically, the idea is I think she has, she's going to kill me. I think she has 200, 300 doors, something like that.
Yeah.
And basically, the idea is okay, this community is super specific. Doesn't necessarily involves clients, but they are welcome. The idea is to help realtors who want to either invest in their own property or become more of an investment realtor, understand the processes through and through, build a network, exchange deals, all that kind of stuff.
Well, that's one thing I think that surprises me when I hear about some situations with realtors when they even reference realtors that retire and then they haven't set themselves up properly to really retire. And then they come back out of retirement to start servicing clients again because they haven't set themselves up. So I think when you are an entrepreneur, you have to always be forward thinking with, what will retirement look like for you? And you're already a realtor. So real estate investing obviously would probably make the most sense in terms of building that long-term wealth. I've even invested in 2 land development projects with my TFSA that I'll turn, say, 100,000 into 300 plus tax-free. I can then parcel that into 6 more deals.
Right.
Maybe it'll be worth 2 or 3 million by the end of it. And I'll have taken 100,000, turn it into 3 million. Right. So I think there's just so many opportunities, but maybe, depending on the circumstances you're in or who you're surrounded with, you just may not think of that. Right. You're just looking for the next deal in the transactions.
I agree.
So.
You've got your head down. Basically, it's what 80-90% of the realtors are kind of doing. Yeah. And I think it is a big shock because that's the thing. You think about the problem with real estate, especially from a realtor business perspective, is that it costs a lot of money to make money. And it's like that old saying, it costs money takes money to make money, of course, but like with the real estate it's nuts. Yeah. And if you're not necessarily involved in actively considering and participating in your retirement, it can really, really hurt you.
Absolutely.
Now, so I guess, are you planning on a book number 2 or?
We'll see. Like, I think for book number 1, obviously is very focused on my business, and it kind of leaves off with me trying to sell it. I actually listed it for sale 2 weeks before COVID, like worst timing ever, but nobody could have known that the pandemic was coming. It was just some circumstances that happened in the business immediately before. Yep. And then I kept it going for a couple of years after. So the book kind of leaves off like in that transitionary period that I've gotten my real estate license, trying to sell the business. So I think maybe in another 10 years, maybe with all the real estate investing experience that I have, maybe even stories from all the investors, like that could even be in itself another book, right?
I love that.
So we'll see.
Well, and I think the experience is that are the most invaluable piece of investing. Because I remember when I was thinking about it as a kid, and 25, 26, 27, had a little bit of coin, didn't really know what to do with it. Yeah. I didn't invest. I didn't reach out to anybody. Yeah. It was just also confusing for me, because when I think of numbers, it's like I can't visualize how things will work out without writing them down and going through it. But I think it's a little intimidating for the average person. Yeah,
and you don't know what you don't know, right? Like, I think if I knew then what I know now, it would have been far more wise for me to go into multifamily in the beginning. Right. As opposed to like I had the short-term rental and where I made the money on that was I bought when the dollar was par. Right. So even looking back, I'm like, why didn't I go into multifamily in the States? Like even that would have made more sense than what I actually ended up buying, but I didn't have any support. So I was just trying to come up with a plan on my own. So I think that's where, having the mentorship and the coaching and people that you can surround yourself in, and even with the mastermind that I'm part of, Synergy, like we're in a Discord chat and there's constant flow of conversation. Like, hey, I'm dealing with this. Does anyone have feedback on that? And, it's kind of isolating. If you I can't necessarily ask my husband for input on something. He doesn't have that experience, but I can go to 70 other people and, maybe 10 will jump in and say, hey, I can help you out with this, or I'll call you right now. And, I think that's where it's really important. So investing in yourself and your education, it will help you, hopefully avoid mistakes, hopefully put you on the right path to be successful.
So, and if somebody wanted to kind of work with you, what would that look like? How do they do it? Those kind of things.
Just in general? Yeah. Yeah. I mean, as you know, I'm pretty active on social, so I'm easy to find at Serena Holmes Realtor or Inspired to Invest podcast on Instagram. So, at this point, people to come to me for a lot of different things. I think the main thing is if they're not in the investing community, a lot of people now are coming to me being like, how do I find these deals? Where can I find them? And that's where I try to, give them input on my experience. I can't say I'm an expert. I try to be careful from a security standpoint. Like I can't say I'm selling securities, you know what I mean? But I have a lot of connections and all of that within the industry. So I try to just help people along their journey and hopefully they can take action and be successful as well.
Good. I love it. And then what about for the real estate aspect? Yeah. Are you looking, if people are interested, to learn more about investment as a realtor? Are you open to them, coming and talking to you about maybe joining up?
Yeah, anytime.
That's good.
I'm an open book. Like people are always like, I'm nothing if not quick. And I think having my own business for 18 years, we landed a lot of business just based on how quick we could always be, right? So when people reach out,
I love it. Speed to lead.
Fast to communicate. I always just try to serve and help people as much as I can. So I think that's where the value will come in and hopefully grow the business in the long run.
I scare people sometimes because they'll call me or they'll text me or they'll find me on Facebook Messenger or Instagram.
Yeah.
And I go like that.
Yeah.
I'll answer in the first ring. They're like, oh shit, I'm sorry. I wasn't expecting you to answer. It's 9 o'clock on a Saturday morning. I really was not expecting that. Yeah. And I think speed to lead is something that, if more people were ingrained, they'd have a little bit more success converting certain things. Okay. Well, thanks for coming on the show, Serena. I really appreciate it. Is there anything that you want to end off at all, or we covered it all?
Yeah, no, I think we covered it all. So,
that's great. Yeah. So if I could just say anything at all, grab the book. That's my next thing, Accidental Entrepreneur.
That's right.
You can find it on Amazon, Barnes & Noble, all of that. Just Google search it if you want. Don't forget to like, comment, share, all that crap. But most importantly, don't forget to leave us a review on Spotify because it helps, get the podcast in front of more people who value the same things as you. So thank you very much and peace out.